Welcome back, guys. It's your boy Mbumi and Co with Funds and Galore, where investing means more. So, guys, we are back to the market breakdown, guys. So we've been I've covered 2 episodes of the back testing, like I've promised you guys. There's 2 episodes on back testing for Euro JPY. This is basically to show you guys how the strategy works after a long duration of time. So be sure to go check it out and check how is our strategy performing so far. I think I need to still do one more demonstration for Euro JPY. Then afterwards you're gonna calculate all the losses and all the win to see if we're in profit or losses. Basically, we'll be calculating how much we have won, the percentages we have won versus the percentages that we have lost. So basically, we don't measure winning and losing based on how many trades you win and how many trades you lose. We base it on whether the account is growing or whether the account is declining or blowing in other words, guys. So be sure to go check it out. Even checked it out, I have part 1 and part 2. Part 3 will be uploaded, will be the next thing that I upload after the NASDAQ breakdown. Like I said, we into a new week. Last week was a beautiful week, guys. We caught 2 trades for NASDAQ. The first trade took us out. Then we caught the second trade, right? I have also posted the demonstrations of those trades on my TikTok account and also on my Instagram account. I will have the links to both my accounts at the description below. So be sure to go check it out, guys. It was a really beautiful week. So today we're going to check what do we do after we had a successful week, guys. So we're gonna check what we're gonna do and how I go about looking for more entries into the market. So we'll just see what the market has to offer us. Then afterwards, we will have our areas of where we predict the market is going to go, and also where are we most likely to find our next entries for NASDAQ, guys. So without wasting time, let's dive straight into the market. So like I said, so this was the let me just show you last week's trades, guys. So we had our first entry at this resistance, at this key level. Like I stated in my NASDAQ entries, you can go check the NASDAQ breakdown before this one. We basically talked about this area. We're gonna be looking for continuations on this area, and so that's what I did, guys. So I waited for the market to come back, retest, but it took us out. Why? Because the market wanted to form some form of head and shoulders. As you can see, we have our first shoulder, our head. Then when the market came back down again, we were able to catch these entries to the upside. So we closed on Friday. We closed this trade on Friday, guys. So basically, when did I take it? It was on Tuesday. We've been holding this trade from Tuesday, and the market finally shot up on Friday. We were able to close just before those dips. So now this week we are going to erase everything and start from the beginning. Like I always say, guys, every week we're gonna be updating our chains to make sure that we always updated and we are moving with the current market. We don't want to be using outdated resources, guys, for a new week. So if it leads us to the same, it will lead us to the same, but it's just vital for us to always refresh our setup. So we're gonna start with our daily key levels. Like I always say, we're gonna place our daily key level, so that is the only key level. We'll also cater for the ones below once the market breaks below here. As long as the market hasn't broken below here, it's not important to cater for these levels too. As you can see, we have another level right about here. Oh, that was a bad mark. Let me just use a zone. we have a level right here where the market is creating an abundance of touches, guys. We look for areas where the market is creating an abundance of touches, because those are the areas where we're going to be looking for our entries and etc. So we'll just keep that one key level, our daily key level there. Let's remove this. So now we're just gonna cater this trend. For this trend, we have an uptrend right here. Okay, we can just leave the daily time frame blue. So we're just gonna cater for our trend right here, guys. So the market is at the resistance, so it's possible for the market to dip, because this is our overall daily resistance, guys. The market tends to respect the daily time frame and the weekly time frame more than the 4 hours, 1 hour, 30 minutes, because it is not that easy to manipulate the market on a daily time frame. You're gonna need a lot of millions or billions for that matter just to be able to manipulate the market at these regions. So it's easier for the market makers to manipulate the market in smaller time frames, like the 4 hours, 1 hours. That's why most brokers like it when you're trading, when you're a day trader. Like, this is what I'm teaching you how to be a day trader. They like it because that's where they know that most traders tend to lose the money. It's hard to trade. It's more difficult to trade on lower time frames than it is on higher time frames, guys. But like I said, I'm here to teach you how to trade on these smaller time frames, so that you can be able to make money trading on smaller time frames, so you can be a day trader. It won't be easy to be trading NASDAQ on a daily time frame, especially if you don't have the necessary capital to be swinging these trades. So it's not advisable to try and swing trade NASDAQ. And it also, because NASDAQ is also very volatile, I would encourage you to swing on the 4 hours, not 4 hours, I mean currency pairs, because it's less volatile than NASDAQ or any index for that matter. So the market can continue going down, or it can just continue creating new highs. So for now, we want to see where are we targeting the market, right? So you're gonna just dive into our 4 hour time frame. Okay, we have the 4 hour time frame, guys. So now we're just gonna be focusing on this area here, because it's above our daily resistance. So we're gonna just be focusing on this area here. So okay, let me just zoom in. So as you can see, guys, we know where we're gonna be focusing, mostly because we day traders, guys. You don't need to be focusing on other levels as of yet now, because we day traders. Let's just focus on the daily, on the closest the market is, or on this playground above this daily resistance here, guys. You want to be close to the market as possible. So we'll just put in our zone here. Why are we placing our zone? We have the first touch here, we have the first touch, we have the second touch, and we have a third touch here. So it shows that the market respects this zone here. So when the market is above, we buy here. Therefore the market board, when it comes back here, we also buy here. And when the market gets here, we sell. And this is our resistance area, guys. This is our resistance area. So we've created the first playground, meaning when the market if the market breaks below here, you could be looking for our entries, for our high probability selling entries from here. Right, you can be looking for your entries for here if you're interested in trading against the market. So I don't trade against the market, so I won't be looking for sales there. If it does happen, I will literally just allow it to happen until the market gets back here so that we can look for our buying opportunities, because we're trading with the market, guys. We want those high probability setups. It's important for us to always gun for high probability setups. So now let's just remove everything so you understand how we're gonna use this area right here. So if the market also drops back here, completing this M pattern at the resistance, depending on how the market approaches the zone here, we can also be looking for our entries right about here, our buying entries back all the way back to where the M has started. So we can also cater this for now because the market looks like it's respecting here. So we can just, so that's if when the market drops back, we'll be also looking for entries back up there at that area. So we're gonna be removing everything now. Again, let me just remove it. Remove, then we can just place our key levels. Let's make our key levels green. For our key levels green, just place our key levels here, and we'll place another key level here just to support the zone, guys, just to support the zone. We can also place this as a key level right here, but not as a zone, as a key level, guys. You just use this key level right here, or you can use a zone, guys. You can use a zone right there. It's totally also fine. So this is basically how the market looks like for now. So let's see what the market is going to do. So basically we can see that the market, let's create our 4-hour trend lines before we dive deep again. So we're gonna change our 4-hour trend lines and make them a different color. So let's make them red. Let's make them red, guys. We do this so that it can just be easy on the eye. You see, you can just put in our levels right there. Let's zoom in to see what's going on at this area right here. Let's just switch to line to make sure everything is properly catered for. So it's best to also put your trend lines at the close of the candlestick. So you also have another trend at this area right here. So we have market has reached our daily resistance, and it also has reached our 4-hour trend, the red trend. So we have two confirmations saying that the market is going to sell, and it also looks like the market is creating an M formation, which can also be another probability only when the market breaks here, when the market breaks the zone over here, breaks below here, retest, could go down too. So it looks like the market might sell, and we also would need the market to sell, guys. If the market drops back here, depending on how it approaches this, if it approaches it correcting to the downside, like I stated in the strategic trading academy, if the market is correcting towards the downside, this might suggest to us that prices have oversold. Therefore, we are looking for buying entries. That's why we also took in buying entries last week, guys, because the market gave us confirmation that, you know what, prices are oversold, even though we're in a resistance. So we've hit the resistance. But if the market, for example, impulses and breaks below here and corrects to the upside, then you can have those confirmations to continue trading towards our zone over here, right? If the market breaks below the zone, then maybe corrects again and pushes to the downside, we can also look for entries right about here, guys, and until our zone over here, so that's basically it. And for this is just to show you guys, in case you're wanting to trade with when I trade against the market, which me personally, I'm not gonna be looking for those selling opportunities right there. So I'll just let the market, I'll put in my first alert here, just so that the market can indicate to me when we have arrived at this area. Then we can also put in our second one here, in case the market also arrives at that area, guys. Then if the market does not maybe respect and plays around here and breaks above and continues, we can also place our alert. Let me just do this. We can also place our alert right about here above this resistance here, potential resistance. This is a potential resistance. I will only know if it's a resistance if market pushes down. Then we can confirm and also place a zone here stating that this is a confirmed resistance, guys. So if the market breaks above and we get those retests, we're not gonna be entering, right? Because we don't have a resistance area at the top. This will be our new high, so we're gonna just wait. If the market does break, we will continue waiting and waiting until we get entries, guys. So for now, we're just gonna chill out with NASDAQ and see what it is. We have our alerts placed, meaning that I'm not gonna always be checking what the market is doing. I have my alerts placed, you see, meaning that I am free for the week for NASDAQ. I know that everything is sorted, everything is set. Now I can just focus on other things. I don't need to always every 2 hours come back, because I know that I've placed my alerts. My alerts are there for a reason, to tell me when the market gets into these areas. We can also place it at this key level here. So we have 1, 2, 3, 4 alerts placed for NASDAQ, guys. 4 alerts placed on our NASDAQ trade, because we'll see what happens, guys. We'll just see what happens from this point onwards. There's literally nothing else for us to do. There is literally nothing else for us to do. So let me just check on XPX 500. What are we doing? If I need to create a video for XPX 500, is anything promising? We still have that alert placed. I haven't checked SPX 500 in a minute, because I know that I have alerts placed. So for now, we'll just wait everything out, and I'll create another video if I see anything. But for now, guys, that is basically it for Nest 100. Like I always say, guys, respect the market, do not fear it. Always trade with a demo account, guys. Test your strategies out for a demo account, whether you're a beginner or a professional trader. Trade with a demo account. So it's if you are not comfortable, or you're having doubts in terms of your strategy or anything like that, so it's best to go test it on a demo, so that you can regain the confidence to approach the real market and to actually see if the strategy is working or not. So, and one thing, guys, there was this other person I was talking to yesterday. He highlighted something very important that I also want to create another psychology video, guys, because I see that my psychology videos are really helpful. You guys are engaging with it, so I'm gonna create another one also to add on the what he told me yesterday. Because the thing that he told me was that he sometimes struggles with entries, like not entries, like scared to lose money when he funds an account. Guys, one thing I want to tell you about funding account is that it is important to always tell yourself, once you fund an account, whether you're a good trader or not, always tell yourself that the money is gone. So that's why I always tell you guys, just fund an amount that you are comfortable with losing. When you're testing out your strategy for the first time in a regular market, fund low, fund with R1,000, fund with $100, $200. Don't take it to the max or take it to the extreme, guys. Fund whatever you're willing to lose. For some people, 1,000 might be a lot, but I wouldn't advise trading NASDAQ. And when you trade in NASDAQ, please do not trade CFD. Trade a micro account with the 1,000 so that you can see if your strategy is working. Like I always say, don't be in a hurry to make money, guys. Don't ever be in a hurry to make money. But more will be covered. I'll be talking about more of this, guys. So for now, peace out, and I wish you a good positive trading week for next week. Follow your rules, don't break your rules. If you lost a trade, don't just step away from the market. Come back, step away, cool down. After 2-5 hours, after your emotions have calmed down, return back to the market so you can see what went wrong and how you can fix it for next time, guys. Until next time, peace out.